In this episode, we're going to discuss restarting my options portfolio journey while I'm not too concerned about a war threat with Iran and how my coffee addiction has made me a better investor. Let's start Investing in Real Life Show, episode 1. Yo, what is up, everybody? Welcome to Sophisticated Investing Life and the Investing in Real Life Show, episode 1. In this show, we will be discussing my journey through options trading, as I see this as the best way for the common person to build wealth and find financial independence, as well as make random connections to the world and bring it all back to investing. So as I just go through a couple things right now, let me just go ahead and get this show right ahead started. So first off, we're going to discuss why am I doing this? Why am I sharing this portfolio journey? I like to mention on the show, I have a video about why I trade options, and it's actually in the card above, and how I got 50% returns. And I think 50% is kind of the high end, but in reality, 30 to 50% can be achieved if you think like a casino, right? So I want to show my journey starting like with a simulated account. And the reason I'm using a simulated account instead of my own account is I want to actually show like the dollars, like the returns being showed. A lot of YouTubers, they build their accounts simply by growing their accounts through adding money to it, not the returns, right? So I want to actually show the actual returns, what can actually be done. I'm doing all these same trades anyway, so it's the same thing. I chose an interesting platform to do this. It's called Collective 2, and the reason I chose it is it's like starting your own hedge fund. There's a couple of hedge fund managers. This is what they use. Mainly, you can get paid from it by having people subscribe to your strategy, and it takes 2-3 years to build up the strategy, but check out the numbers that can work out for you, right? If you really start doing things and making things happen. Now, of course, you got to be a top manager to do that. Maybe I have too much confidence believing I can make that happen, but it is what it is, right? So that's a thing. Even though I'm in this platform, I don't like it that much. I can't see my trades as well because I trade out of the money options. I'm going to explain what all that means, right, over the next series of videos later in the weeks, starting with the basics of options 101. So check that out. Subscribe to the channel so you can see that because that's coming out later this week. But yeah, no, this platform kind of the technology's not there, right? They made me make a bad trade for some deep in the money calls. In reality, I wanted deep in the money puts. Deep out of the money calls. It's crazy. And I thought about resetting my strategy because you can do that, but it costs $30, right? And it's like, I can get out of that hole on this platform pretty easily. So let's just be calm. But just to be safe, let's also track our own trades and how they're actually doing, like I have done here. So this is what I'm primarily going to be using because there's no extra numbers being seen and used like it is in the platform. And we'll just track it through here. So far, we opened up this account on January 5th, simulated account of $10,000, January 5th, 2020. This week, we are up $109 net. That's about a 1.1% return. If you compare that to what's going on in the markets today, that is equivalent to, let's see, the S&P 500 returned 1.44%, approximately the same for the Russell 3000, so the 3,000 top stocks in the U.S., and the Dow Jones, the Dow 30, only 0.88% for the week. So feeling not too bad. My end goal is not to beat the S&P 500 though, so it doesn't matter if week to week I'm straggling a little bit, but overall, when the market's going down, I still want to go up. So that's the big reason. So far this week, we got 1, 2, 3, 4, 5, 6 winning trades. And some of those winning trades all came relatively quickly. Like if you see right over here, what I got have highlighted here, all these trades were open and closed very quickly. I am a little bit untraditional from your typical options trader in that I like to collect a lot of premium and take profits early. I am not playing games. So we got some of the trades here. Actually, it's 5. There's 5 that I actually took profits from, because this one in particular, this is Broadcom. I cannot explain why they're struggling. I can't explain what is going on. I don't know what the issue is. So Broadcom put a trade just a week ago. Remember, I just set this up a week ago. And a week ago, the stock price was about at $312. So at $312, I was like, okay, this is cool. I'm going to set up a credit spread, since I tend to do wide credit spreads. So 10-point increments. Again, if you don't know anything of what I'm saying, to stay in the loop and be prepared. I'm going to be showing a lot more how-to videos and the bare bones basics of options trading. So you'll catch up to speed eventually. But I did an options trade. Essentially, the stock's at 312. I'm selling a put option at 280, right? And when I sold it at 280, I collected, at that strike price 280, it was $1.65, and of course made a spread. So I collected $65 in premium, right? But look at it now. On just the 280 part, essentially doubled, because the stock price is falling all the way from 312 to now, where is it at? To 300, less than 300, right? And I shouldn't be too concerned. I should only be concerned once it gets to 290. Once it gets 2 to 3% close to my strike price, right? So that's 287, 288-ish. Once it start getting into that level, that's when I should be concerned. So I'm not concerned yet. And since I put the trade usually in the 4 to 7 weeks before time expiration, time decay should kick in. So it should kick in eventually. I did do something stupid though. I did add an extra, a loss preventive thing, adding call options. So selling a call credit spread when I shouldn't have. I shouldn't have done this. I got a little desperate. I should only worry about doing this when I'm actually in trouble. Like if Broadcom actually goes down to 290 or 287, that's when you can do some minimize your losses or even roll the trade. That's when I should have worried. I did this too early. I was kind of quick on the trigger. It's been a while since I had a real losing trade that didn't turn so quickly. That's partly the benefit of a bull market. So let's go back to the reason why I'm doing this. We're going to share my thoughts in real time like I did. We're going to focus on returns, not portfolio value, and just overall share the journey. Not enough people share their journey along the way. They just make it to the end and then they talk about how they got there instead of you really just understanding how they got there, right? So that's what I'm planning on doing. Okay? And Broadcom, again, is messing me up. It's definitely messing me up, but I am just hoping it turns positive. Things just hold up. They'll hold up eventually. We'll see how things goes. All right. So moving on to stocks that I am looking at this week. So if I'm able to close out my trades, I have a couple of trades on. Let me go back and check. Some of those trades, I have an Apple trade on. I have another Boeing trade on. It worked so well. It worked so quickly. I put another one on. And I already told you about the call credit spread I have for Broadcom that as soon as it turns slightly positive, I'm closing it out. I shouldn't have put it on. But all the other ones, I'm waiting to hit a certain profit target of maybe 30, 40% or dollars, either or, and then close the trade out. So that's the plan. Now, stocks I'm looking at. AMD is one of the stocks I am looking at, which I think is pretty interesting. And these are also stocks that I'm actually thinking about not selling spreads, but actually selling naked. So it was actually cheap enough for me to sell naked and not have to reduce my buying power too much. For a $10,000 account, you really shouldn't think about selling naked until you get to $25,000 in an account, but that takes too long. So you have to really just play it case by case. So if we look here at AMD, I want to sell around here. I want to sell the 40 and collect $62.50 and experience the time decay. That is about 87-88% chance of a winning trade. So I think I want that set up. Maybe have AMD come down a little bit more to maybe $46, $47 before I actually make the trade. Next is Walmart. Walmart's another one. Walmart, I've been looking at this since I started this account, really even beforehand, man. Over a week, since the beginning of this year. I've been looking at this Walmart trade, and it's like, it looks good at the 110. At the 110, it looks really good, and I can sell naked and collect $105. But it's like, I need a bounce back. I need the stock to start going back up to 117, 118. Like, it's low enough, all right? It's low enough. Start getting to the point where my probability of winning is higher, and I'm going to be in. Last trade I'm looking at is Vmware. Vmware has a good setup where I can potentially also do a naked selling. I could probably sell naked at 150. It's going to take up a lot of buying power, though. So for a smaller account, it's a lot. So I'm not sure I'm going to do it yet. But if I were to do it, doing it at the 135 level would be optimal. Collect $110 and keep along the way. So that's how we're looking on the option standpoint. Now, let's discuss some news. Okay? So I mentioned in the opening that I am not that concerned about the Iran stuff, right? I am not concerned about Iran creating World War III. The missile thing happened. It wasn't that big of a deal. Perfectly fine. I actually just read this piece that was on Market Watch by the professor Jeremy Siegel, giving his take on what's going on in the markets. He thinks the markets are fully valued, but not overvalued. So what that means is, at this moment, the fundamentals justify the valuation or the sentiment in the market today. So remember, stock returns come from two places: the fundamentals of companies and the sentiment of investors, right? Now, the sentiment of investors, also known as valuation, is higher than average. If you look over historical averages, the sentiment is higher. Valuation is higher. It's higher than above average. But the fundamentals are also above average. Margins are at an all-time high. Companies continue to return money back to investors. There's reason for this to be the case, right? There's reasons for this to be the case. So that's all he's saying. It's fairly valued, not valued. On top of that, because we are a lot more independent in terms of our oil production, so what if we get cut off from Iran? It's not the end of the world. I mean, it's not. It really isn't. It really isn't the end of the world. So keep that in mind. Maybe though, there was a little bit of a shock in the markets, after markets, but it wasn't really nothing. Nothing really happened, and it's so happy World War III is not going to go on, because literally my dad called me, told me, be prepared. You might have to, Selective Service might be calling you, and I'm like, oh, come on, man. I haven't worried about that in years. So that's good to know. You shouldn't be concerned. If you are interested in doing anything in the markets, if you're interested in starting investing, today is the day. Don't wait. Don't wait for the market to tank. Don't wait for the markets to fall. Some people have been waiting since 2015, and they got a little bit of a taste at the end of 2018, but really wasn't that bad to historical measures, right? So jump in right now if you can. Now, I will also be shouting out another finance YouTuber every week, and this time I'll be shouting out Joseph Carlson of the Joseph Carlson Show. We just put an episode out. He's a big dividend growth investor. He is one of those guys that, to be honest, I see his account building more through his contributions versus his actual returns. But with that being said, he's built up to a $70,000 account, which I cannot say I am at. Right? He's way ahead of me in terms of that, right? He's a dividend investor. Speaking of dividend investors, I kind of took a shot at them and told them why, you should trade options instead. So if you want to learn more about that, check that out in the card above. But Joseph actually is the one who gave me the idea of starting the show. I did some more research on it. It seemed like a pretty good idea, and it's been pretty good. Let me show you the rest of his channel. But yeah, it's definitely worth it. It's definitely worth doing so. So thank you again, Joseph, and hope to hear from you soon. So with that all being said, let's go ahead and turn to our feature, learning more about how my coffee addiction has made me a better investor. So let's talk about coffee. Not just any coffee. For myself, I am definitely an iced mocha guy. I mean, if anybody wants to go out there, go to Starbucks, get me an iced mocha, no whipped cream. That's my favorite. I get down on that, and I am truly a coffee addict. It didn't really hit me at first, but I've been drinking at least 1 cup of coffee every morning pretty much since my senior year of high school, right? That's a long time. It's a very long time, number of years. And I've always needed at least 1 cup. I don't need more. I don't need 2, 3, 4. I just need one. Just one to work. Now, what's the connection? What's the connection? How does my coffee addiction make me a better investor, right? What's the connection? Well, I can tell you that it's made me a better investor because I know that feeling when I don't have coffee. When I don't have, it's a nice mug, by the way. I don't have any coffee, right? When I don't have coffee, it's insane how much my head hurts. Matter of fact, there's one time in particular that just separates from the pack, right? It was actually the year I graduated from college. As you can see, went to Texas Tech University, guns up, great at basketball, by the way, which is my favorite sport. We're going to be talking about that much later. So episodes down the road. But actually, so it was the day of my graduation. Now, the night before, I stayed up to about 2 a.m. Or so. And it was because I had my mom there, I had my aunt there. They're helping me clean up my apartment for me to move out shortly after. I took full advantage. I woke up a little bit later than usual. The graduation, I want to say, started around 1, and we needed to be there maybe around 11:30, 12-ish, all the graduates. So I woke up a little bit later, went to brunch with my dad, and we didn't go to any typical place. Really, we just went to Chipotle, right? Whenever we go to Chipotle, always get a lemonade. Always get a lemonade drink. Same thing happened here. But between the time of waking up, and going to Chipotle, I didn't make coffee. And while at Chipotle, I should have got a Coke or some other drink that has caffeine in it. Didn't do it. Never crossed my mind at all, right? So it's like, hey, we're going. We finished having brunch at Chipotle. Going for our graduation. It's a big scene. Very excited to see people I know. Everything's all fine and good. The graduation ceremony starts, and they finally started calling out the business students one by one. It was my time. I walked across the stage, waved to my family. They made all this noise for me. It was a great time. And then the moment I sat back down, my head started pounding, like hard. It was crazy. I was like, oh, nah, this is not gonna work. This is not gonna work. I'm like looking around, like, does anybody know when this is gonna end? Like, come on now, I need something. And then it didn't dawn on me like why I have this headache until like maybe 20 minutes. I was like, oh snap, I did not have any coffee today. Don't get me wrong, I forgot having coffee before, but it never hurt like this, because eventually I forget and I find some, but this wasn't the case. I was stuck. So graduation finally ended, right? The graduation ended, and it's like, cool. All right, so I'm not gonna take any pictures with all y'all. I'm sorry. My friends, some of the people I really haven't spoken to since, they were all asking me to take pictures and everything. I was like, no, I gotta go. So yes, I know it's really bad. So for those people, there's some people that they know who they are. I'm sorry. Anyway, I got back to my car as quick as possible, found a gas station, bought a Coke, drank the Coke, barely helped a little bit. We went out to eat. I drank like 2 or 3 glasses of Coke there, right? And then it finally started getting better. By that time, it's like 6, 7 o'clock at night. And of course, I stayed up to like 2 or 3 a.m. again, but not this time to clean, just for Netflix, just watching Netflix, right? But in that, the big lesson, this in real life lesson from my coffee addiction is that you need to remember those times, those feelings you had when you were without, when you weren't investing, when you had no light at the end of the tunnel, right? I experienced my own financial troubles, and to an extent still am, but they were at its worst maybe 2016, right? 2016, where literally I would pay every bill, budget out some money for groceries, and maybe have $50 left over. Like, it was rough. And I remember the feeling I had having to ask my dad to borrow thousands of dollars to help me move from one part of the country to another. Like, that's something I could have easily afforded, or if I only asked for a little bit, yes, that'll be fine. But asking for $4,000 or $5,000 to do that, like, that's a lot. And I remember that feeling. I truly remember that feeling, and that's why I keep trying to push through, keep trying to make time to invest, keep trying to create other passive sources of income for me. So I keep trying to do all these things, and I finally came across the light at the end of the tunnel, right? To me, that is options trading, which is why I'm going to walk you through my journey with it. But the biggest lesson is you all need to remember that feeling. When you aren't being consistent, when you're starting to lack on putting money into an investment account, or you're thinking about getting a rental property, but you realize how expensive it can get sometimes. Like, push through it, because you want to set up that opportunity, because the worst thing could happen, that feeling, you don't want to deal with that feeling. We all have had that feeling before, but we don't want to deal with that anymore. Well, that is it for the first episode of Investing in Real Life. Come back next week. We got more things to discuss with my options portfolio, as well as me telling you why Kevin Hart is rich, but not wealthy. I'll see you all soon. Thanks for watching. Stay sophisticated.